Welcome to the Contrarian Capitalist. Delighted to be joined today for this mid-month macro. Delighted to be joined by Chris Steadley of Live Squawk Commodity Corner. Just a couple of bits of housekeeping on this. First of all, we are trialing this, so this is the first time we've ever done a mid-month macro. Therefore, we're going to make it free to everyone. So we're going to do the video, which will be above this text. Secondly, there's going to be no extra chart deck. So for those of you that read the monthly wrap, there's normally a chart deck that goes with it. That chart deck's not going to be here. This is just going to be a video talking and going through various things that are happening in the markets at the moment. Number three, please do like and share this article and video with your network if you find it useful. It really helps us to grow and it helps us to add as much value moving forwards as well. And number four, please do provide feedback. The reason that we're doing this is because we had so much good feedback from the monthly wrap that we decided that this would be a good thing to trial. So thank you for your feedback. Please continue to provide your feedback as well. And number five, there's going to be some buttons below the video, but please do subscribe to both Live Squawk Commodity Corner and also the Contrarian Capitalist as well. Housekeeping out of the way. Chris, good morning. How are you?
I'm doing great, Rob. How about you?
Very good, thank you very much. We're going to go through my chart deck today. So I'm going to bring up that share screen. Plenty to talk about, but which market in particular would you like to start with, Chris?
Sure. Let's start with crude oil, and then that'll kind of lead right into the macro discussion related to the stock markets.
Okay, so I've got a CFD on WTI crude oil. I'm on a daily chart. Again, I'll work with your guidance. What can we see here at the moment?
Sure. So, obviously the news of the day, the last several days has been Israel and Iran going at it. So that led to that huge spike that we saw on Friday. We're recording this at about 9 a.m. Central on Monday morning. So the fighting has been going on for roughly 4 days. So, we had a big spike on the opening last night, Sunday night, and now we're kind of moderating down, roughly 50 cents to a dollar right now. Going forward, it's obviously brutally tough to know or to predict politics and what's going to happen in relation to that war. But I do want to do just a little bit of housekeeping data because there's been a lot of fear mongering going out, over the past several days. Some analysts are predicting 130 or higher if
Mhm.
things really escalate. If they really do start clamping down on supply, out of Iran, and that to me would the worst case scenario essentially has to come out of them bombing or further bombing oil fields and natural gas fields and what have you, because tankers are still being loaded,
Mhm.
and the Iranians have no financial incentive to shut the Strait of Hormuz, which is what some people are again fear mongering could happen. But just to give you some context, 90% of their oil goes through the Strait of Hormuz, or excuse me, the Strait of Hormuz, and likewise, 90% of that 90% goes to China. So if you think that they're going to do something dramatic to really make China mad, I got a bridge to sell you. So I think that's why, um, oil prices have kind of moderated, today and perhaps even going forward. So that's why I'm not uber bullish from here. Again, unless things really, really get out of hand in the oil field. So, and also too, we got to keep in mind that according to most data that I've seen in the last few days, is that Friday's spike was due to short covering, as well as just outright panic buying, by
Mhm.
speculators. So that always makes me a little leery that, that could be a 1 day trade, a 2 day trade, and really nothing more than that. So, I always try to make sure that cooler heads prevail whenever I'm talking about any really volatile uh, market that everybody and his brother has an opinion on. So, I hope that that makes sense.
Yeah, I'm just looking at the data here on Friday. So we look at the fact that it opened at $68.67. The high was $77.57, and then the close ended up being $72.91. So it's still up just under 6% on the day. This was Friday just gone. Yeah,
Mhm.
just over a $4 increase. But again, I look at that. I don't know, would you call that a reverse hammer candle? I look at that and yeah, I agree with your sentiment. If you look at the underlying economics and everything that's going on, and are we as a world in terms of the economy, are we slowing up? Then I would think that the consensus is, well, yes, we are, and of course that has a massive impact on crude anyway. So yeah, no, I echo your sentiments there, and I didn't know that about the Strait of Hormuz, i.e., that 90% of that 90% goes to China. So yeah, why would Iran shoot themselves in the foot by closing it? I think
Mm.
that's a if you're going to take anything away from this, I think that's probably the key thing to take away, because I know that a lot of Friday and a lot over the weekend, of course, everyone became an expert on the Strait of Hormuz straight away. And pardon the pun. And of course, I didn't know that 90% of 90%. So that wouldn't make sense for them to even think about closing it, because you don't want to annoy China, to be honest.
Yeah. Yeah, exactly, exactly. So, and also, that would very much annoy their neighbors, specifically Saudi Arabia and the UAE. Now, the UAE and Saudi Arabia, they do have a small workaround of some pipelines. Iran really doesn't have that.
Mhm.
But again, you're just throwing fuel on the fire if you start doing something like that. So, and to your point on the dojis and the chart patterns that we're looking at, that wasn't quite a gravestone doji. Friday's trade was not quite a gravestone doji, but it would have to close essentially unchanged in order for that to be a true gravestone. But again, with it having that spike and essentially only we're able to keep half the gains or less, that still doesn't bode very well from a technical perspective. So, and
Mhm.
again, this will be a pattern that we'll have to keep an eye on over the next several days, both technically and fundamentally too. So,
Fair enough, and I thank you for that extra input there, Chris. I'm just looking at the tabs that I've got open. We could go to platinum, gold, silver, so we could look at the precious metals, or we could go down the route of having a look at the S&P 500, possibly the Dixie as well. Which would you like to look at first?
sure. Let's actually take a look at the platinum market quick, because actually that kind
Okay.
of bleeds into some of the Friday trade that I was discussing. So, Friday's trade was pretty amazing. That was a heck of a red candle that we saw on Friday. Now we're bouncing back a little bit early Monday morning. So, and this was counter. I was kind of surprised on this trading action because uh, um, platinum has an interesting dynamic in the sense that it's both a precious metal, so it does see some quote unquote safe haven status, but it's
Mhm.
also an industrial metal. So hypothetically, if a war were to break out, we would need industrial metals like platinum, copper, aluminum, etc. And so Friday's sell-off was kind of alarming to me because, again, fundamentally, you'd think that we would need that, but to me, that was again just outright uh, panic selling, shoring up positions, what
Mhm.
have you, and then that's perhaps even slightly bleeding into today of just maybe some people either short covering, that were able to actually get on the right end of the short end in relation to platinum, because obviously that's been on a heck of a up streak here recently. So,
Mhm.
I really, from a technical perspective, don't have much insight into that. And the thing is, too, is um, that that market does not really have an options market.
Mhm.
So, if you do try playing in that from the short side or the long side, just make sure that you keep your risk management tolerance in place because, I don't think that we're out of the woods in relation to volatility quite yet. So, um, if that
Uh,
makes sense. And that does, if you want to trip over into gold too, we can tackle that one now, because that does bleed into my gold discussion as well. That gold. Did you, if you want to switch over to the gold chart?
Yep, absolutely. So apologies. There we are. There's a
Yeah.
gold spot. This is spot, I should say. No, this is futures. Um, yeah, futures. I'm looking at the futures market at the moment on the daily there, Chris.
Okay, yeah, that's fine. That's fine. Spot or futures are fine. So, again, we're putting in a really nice triple top in relation to gold. I'm not quite convinced of the safe havenness of that when we start getting to these levels. So, I'm still of the camp of, looking for a pullback to at least 3,300, roughly $100 from now, or perhaps even to that 3,200 before I even really wanted to take a look at trying to get on the long side. And the beautiful thing about gold is that does have a very liquid options market, so you can try and keep your risk as capped as you possibly can. So, um, and again, that one's going to be just as volatile as some of the other markets that we've just talked about in the last few minutes in relation to the oil situation and geopolitical volatility. So,
Yeah, a lot going on here. I would just go back and say that we on the monthly wrap, we always say, well, we always write. We never actually always say it. My apologies. We're not financial advisors, so don't take any of this as, any form of financial advice. I look at that platinum price, at what, $1,264 as it is at the time of recording. I still think that's uh, a good entry if you're looking to acquire physical. But I appreciate that, again, it can be quite volatile. And this goes on the back of looking at all the various ratios that we've done in the monthly wrap last time as well. Because I know that I do write about physical gold, physical silver, physical platinum. I still think, that entry point at 1264, I still think that's relatively attractive. Of course, not as good as it was when it was, hovering around 890, 900 just a few weeks ago. But and looking at gold as well, yeah, looking at the triple top here on the daily again, yeah, it's a tough one to call. But if you're looking at the very long-term picture, again, it's in a healthy position, I think. Although, as you say, as part of a pullback or even a bigger market sell-off, when that actually happens and when that occurs, because it will have to happen at some point, that again, that could present a very good opportunity. But again, none of that is for investment advice, so it's just for educational purposes only. Well, should we
mhm.
move on to silver there, Chris?
Sure. And one thing, you just briefly mentioned ratios. I did an extensive write-up in that for last week's weekly newsletter that I do that's published every Friday. And what's always kind of deceiving about some of these ratios is you can see big moves in an individual leg, but the ratio really didn't do that much. And that's exactly what happened with platinum and gold over the last few days. That has not really changed all that much, despite the inflows and outflows that we've seen in platinum and gold over the past few days. So again, keep those ratios in the back of your mind, keep them in your tool belt, but do not trade off of them solely by themselves. You've got to take a look at just like what we did a few minutes ago by taking a look at platinum, then taking a look at gold. Hey, these are my entry points, these are my exit points, etc. Rather than just trying to blindly blindly, excuse me, blindly buy a
Mhm.
spread. So,
No, fair enough. No,
um,
thank you for that. I appreciate those words. It's good to set the scene, so to speak. But I'm looking at silver again. I believe I'm on futures here. Yeah, I'm on futures. We're sat at 36.29. I'm just going to zoom in. We can see here, of course, back at the start of April, like most things, it's gone down. It's sort of, yeah, recovered, a V-ish by the 22nd, 23rd of April. But I'm just going to zoom in because this will look at this price action in the last week or so. And to
mhm.
me, this looks like not a lot's happening, not a lot's going on, which is surprising. But then it is silver, so it shouldn't be surprising because silver always likes to disappoint when you least expect or when you least expect it to. What are your thoughts here, Chris? What we're looking at?
Sure. And again, that does bleed into slightly into my platinum discussion that it's both a precious metal and an industrial metal. So, its solidness, over the last few days, uh, is uh, is quite friendly to the market in my mind, if you're bullish. But again, with the volatility and all the craziness that we've seen geopolitically, we could easily see a pullback, perhaps more modestly than what I, was initially hoping or thinking we would see. I would maybe look at, um, 34 to 35. Um, before, really trying to get long on this. So, again, we're at some really lofty levels, and especially whenever you start talking about multi-year or multi-decade highs, I always get a leery that, especially when a market essentially goes parabolic, you know, I always get a little bit leery about trying to get long a market like that. So,
Mhm.
I would look for a modest pullback before, really considering that. So I always try
Yes.
to be as conservative as possible on some of these things. So,
No, no, exactly. We're only here discussing, our thoughts and what we can see on the charts as well. We don't have our crystal balls and, all of those sorts of things. So I think that's the joy of these discussions. And I think that's what people really appreciate as well. It's, two people that are very knowledgeable, but also just having a chat about what we're seeing. And again, that's why we say, whatever we speak about, it's not financial advice. So pretty much on silver here, not a lot going on. So again, could slingshot to the upside if things kick off, but again, this bit of consolidation at the moment probably quite healthy from a medium to long term point of view, but in the short term, you wouldn't be surprised if it somehow did get down to $34. It is what it is, so to speak.
mhm.
Perfect. So I've got here three more charts to look at. I've got the S&P 500. I've got Bitcoin as well, just for curiosity purposes. Also got the Dixie dollar index as well, which seems to be on a one-way trend to the downside at the moment. Which one of those three would you like to start with, Chris?
Let's start with the S&P, and then we can go over
Okay.
into Bitcoin and the dollar. So, yeah, the S&P, again, that's eerily similar to a gold chart, just on a different time frame, in the sense that, we're kind of bumping up against some all-time highs here, perhaps a triple or a quadruple top now. Um, I'm still a little leery at these levels. I hate to be the consummate bear, but you got to keep in mind these gaps that we've put in, roughly near 5,700, as well as 5350.
Hmm.
And also too, I'm a little leery about the speculation that's been going on in the markets. I do not want to or pull out any specific names, but there's been a lot of retail buying in leveraged ETFs that are, two times or three times X, of a certain stock. And that always makes me a little leery, especially when we're bumping up against, these all-time highs. And uh, also from a valuation perspective, and this is brand new stuff that I've never discussed in this podcast or on my newsletter, is you start looking at some of the valuations of some of these companies, and they're just getting completely out of whack. And specifically, AI is the term du jour now. If you talk anything about AI or doing anything with AI, your stock's going to rally. It's almost
Mhm.
guaranteed, knock on wood. But some of these valuations in relation to AI are just getting completely uh, mind-boggling in my view. And I'll give you one company that I'm going to keep nameless here. I was just looking at their charts and income statement this morning. So for last quarter, they had revenue of 14 million. Their net income was negative 43 million, yet their market cap is $4.3 billion. These numbers just don't
Wow.
jive, and there's
Hmm.
zillions of examples of this, So
Hmm.
that makes me a little leery that, again, we could see a sizable, just outright fundamental pullback on both the S&P and the NASDAQ too. So, again, just be very, very cautious when we start getting into a lot of, dare I say, over speculation in some of these tech names.
Yeah, it certainly presents opportunities, I think, for the future in terms of looking to the downside. I know that I've long been an advocate of a blow off top, all new time highs in the major indices, and I think I have no price targets of where that could go, to be honest. But once things are at even more extreme levels than they currently are, and again, great numbers there from that, you know, said company. To me, with everything else that's going on, um, that to me just seems that the downside is the trade to the downside. I think at that time would be highly more likely to succeed than more continued upside because
Mhm.
it's yeah, things are not healthy at the moment underneath the surface. I mean, I think I'm as amazed as most other people that look at charts. If again, I'm just going to zoom out of this S&P a bit. I mean, that is near on near a, near on near a perfect V-shaped recovery. And I remember all the doom and gloom, obviously around at the start of April, and it took a very brave person to suggest that we could be where we are now. That being said, again, none of that is trading or financial recommendations. I think, yeah, to the downside, at some point in the future, is probably a trade that's likely going to be more beneficial than looking at the upside. If we look at the dollar here, talking of things going to the downside, yeah, the dollar is on a very good path at the moment to the downside. Again, try not to get too much politics involved in this. Yeah, I know that Trump and co. Need and probably want and desire a much weaker dollar. Not a lot of action given. Again, all the news between Iran and Israel at the weekend. Do we think this is? I mean, I think this is probably still going to go downside. Have we got any other thoughts on this before we wrap up with Bitcoin, Chris?
Sure. I don't really have too much of a view on the dollar index per se. I do not really want to stick my hand in that fire per se. But what I will say is that every darn analyst on TV or social media is bearish the dollar. And when you get, everybody on one side of a boat, usually the opposite happens. So, that's why I think it could be due for a bounce, but is it going to go back up to 110? Probably not, So
Hmm.
again, just be very, very cautious. And just because the dollar is going down as an index doesn't mean that it's going down in every darn currency on planet Earth. I've been very bullish on the yen. That's been moderating a little bit, but I'm still bullish on the yen versus the dollar, and that plays back into my thoughts on the Nasdaq. That bearish Nasdaq is usually bullish the Japanese yen. So, just again, you've got to take all of these bits and pieces and throw them into your pie.
Uh,
So, for lack of better phrasing. So, but from a technical perspective, just looking at the past few days, it does look like we do have more downside. Hold on.
yeah, well, while you stepped away there, Chris, I'll go in. It does look like there's a lot of downside there. I would have expected maybe a bit of a bigger uh, oomph to the upside, maybe on Thursday and Friday. But again, it's watch this space. I think is probably the best way to do that. And
Well,
I'll just
what I was just gonna what I was
yeah.
just ultimately gonna say is that the charts do look uh like they have more downside potential, but we're getting into relatively oversold conditions. So, and like I said, whenever sentiment is weighed or skewed completely to one side, I always, as you call it, the contrarian capitalist, I always
Mhm.
try and take a contrarian view whenever it looks to be necessary. So,
Fair enough. I'm just looking at the Nasdaq there as well, just based on what you said again for about the yen there. So again, it's very similar to the S&P 500. It's near on perfect V-shaped recovery. Final chart to look at here. This is more just for curiosity purposes, because I know that everyone and their dog's got their own two words on Bitcoin. I'm not even going to get into how it has reacted or not reacted or correlated to good news, bad news, or anything like that. Just from a very basic perspective here, obviously we've seen it, from April, rally up from what 70, call it 75,000 near the lows, up to just over 110. Again, a bit of up and a bit of down, but it seems to be that it's quite happy around about $100,000 at the moment. And again, I'm not going to get into any arguments or debates about how it's reacted to all the news that's been going on. Uh, and any other thoughts on Bitcoin at all, Chris, as we're looking at this chart?
Um, Bitcoin does have a strong correlation to the Nasdaq, so just always keep that in mind. I think that could be part of the bounce that we've seen recently, and also that could help keep things capped as well for both markets. If we start reaching up into that 110-ish area again. So, um, again, from a chart perspective, if you can hold that 100,000, level, it is optimistic, but that's very, very weak support in my view. So there's a lot stronger consolidation near 92-ish. If you can't hold that, then we could easily retrace the lows that we saw around Liberation Day. And none of given how volatile Bitcoin is, none of this should be out of the question per se.
Mhm.
Because just look at the sell-off that we saw. It was a slow burning move, but the sell-off from early January all the way to late March into early April. So
Mhm.
Bitcoin is known for doing big moves. So again, just always keep prudent risk management in place. If you start looking at, these very short-term support levels, like I said, of 100,000 and 92-ish. So
Perfect. Well, Chris, I really appreciate that. Maybe we should have started with the overall Archer news, but I think most people know what's going on at the moment. So what I mean by that is at the time of recording this, as you said, 9 o'clock, half nine in the morning, Central Standard Time. Then, of course, Israel and Iran are at loggerheads. We've seen Israel start attacking or attack Iranian facilities. And of course, that back and forth between those two countries has been going on. And I imagine it might be going on for quite a while. But in terms of overarching news, that's where we're at the moment. We're not geopolitical experts to go into the weeds of who's done what and how and why. I'd recommend people check into the Contrarian Capitalist podcast because we've got some really good people on in the next couple of weeks. Dr. Anis Al-Hajji's on the podcast this coming week. He is an expert on Middle East relations and also oil and natural gas. So I'm looking forward to that. Check out that podcast episode. That does it for this mid-monthly macro. Chris, I just want to say a massive thank you for your time. As I said at the start, please do like and share this video. Also, please do subscribe to both Live Squawk Commodity Corner and the Contrarian Capitalist. And again, we've done this on the back of all of the really good feedback we've received from the monthly wrap. So this will be made free to absolutely everyone. I just want to say a massive thank you. Number one to you, Chris, for your time and effort that you put into producing this as well, and also to yourself, listener, for believing in what we do and appreciating the value that we add, and also for providing that feedback. We do read it. We do work to get better every single video that we do. So thank you very much. Chris, I don't know if you've got any other final words before we sign off.
No, I don't have anything else to add right now, but if somebody does have a question related to any of the commodities that we've discussed, or any ones that we didn't get a chance to discuss today, just reach out to me. No problem at all.
Fantastic. We'll be back at the end of the month with the monthly wrap for June. And again, if you're going to if you are reading the post that comes with this video, there are buttons below to subscribe. You can also then get hold of Chris or even myself if you want. Send us a direct message. That would be absolutely superb. Once again, that's mid-month macro for June done. We'll be back in a few weeks with the monthly wrap for June. Thank you very much and have a great day.